Analysis for Forex pairs Euro US dollar and Great Britain pound US dollar. Euro US dollar. During the Asian session, the Euro US dollar pair lost the support of the round level mark of 1.09, with investors becoming nervous ahead of the release of US inflation data. The US inflation report is expected to offer clear guidance on the Federal Reserve's interest rates. As a result, the major currency pair has attracted significant offers. Geopolitical tensions have caused S&P 500 futures to shift into negative territory. The conflict between China and Taiwan has intensified, with the Chinese military surrounding Taiwan Island with 58 aircraft, according to the Taiwanese ministry. This has resulted in a weak appetite for risk-perceived assets and a risk-averse environment. Investors' expectations for a hawkish Federal Reserve policy have led the US dollar index to reach a day's high of 102.21. According to the CME FedWatch tool, 66% of bets are in favor of a 25 basis point rate hike from Federal Reserve Chair Jerome Powell. Investors will keep a close eye on Wednesday's U.S. inflation data. While headline inflation is predicted to decline further due to lower oil prices, the core consumer price index CPI, which excludes oil and food prices, is expected to rise due to higher labor cost index data. The tight labor market conditions in the U.S. have forced firms to provide higher payouts to retain talent, resulting in higher disposable funds for households. In the Eurozone, retail sales data will be closely monitored. Monthly retail sales in March are expected to decline by 0.8% compared to February's expansion of 0.3%, and annual retail sales are expected to decline further to 3.5% from the prior contraction of 2.3%. Although this may please the European Central Bank, it is insufficient to support a neutral stance for the upcoming monetary policy meeting. Technical analysis for Euro-US dollar. Euro-US dollar has been bullish since the middle of March, as it headed toward the major level at 1.10 on weak economic data from the US. Although the NFP report on Friday improved the sentiment for the US dollar, and this pair retreated lower toward 1.09 where it closed the week, with the 50 single moving average holding as support. Great Britain pound US dollar. On Easter Monday morning in London, the Great Britain pound US dollar pair refreshed its intraday low near 1.24 for the fourth consecutive day, as the US dollar recovers in a risk-off environment. The US Federal Reserve's hawkish expectations, compared to recent doubts about the Bank of England's next move, may contribute to the pullback moves. The US dollar's rebound is bolstered by fears from China due to military drills near the Taiwan Strait, triggered by Taiwan President Tsai Ing-wen's US visit. Meanwhile, the Federal Reserve's renewed bets on a May-month rate hike are supported by the recently firmer US non-farm payrolls. The CME's FedWatch tool suggests a 66% likelihood of a 0.25% rate hike in May. In contrast, the Bank of England officials appear less hawkish, with a pause in the rate hike trajectory, even as UK inflation remains a concern. The S&P 500 futures remain directionless around 4,130, after a two-day uptrend, while the US 10-year and 2-year Treasury bond yields remain under pressure near 3.37% and 3.95%, respectively. As a result, the benchmark bond coupons continue to extend the previous day's losses, reflecting the market's rush towards risk safety amid economic slowdown fears. The Great Britain pound US dollar pair's intraday movements may be restricted due to the Easter Monday holiday. Thank you for watching this analytics. Our company specializes in providing signals for trading in all financial markets such as Forex, stock market, and crypto. You can find the whole article at the link in the description. You can also like this video and subscribe to the channel.